How would you describe the current state of the small bay market right now in 2025?
It's frothy. A lot of new entrants in the market. Seeing a lot of new faces. Institutional capital is dying to take a position.
I think if you're a landlord, it's great. I think if you're a seller and you've owned this property for a long time, chances are you're going to make a ton of money.
The stuff we're buying, we're still buying. We feel $100 to $150 below replacement cost. So I don't think there's not going to be new product coming to the market. So the existing stuff's only to get better because the demand's still there, right?
From the credit perspective, I think there's no shortage of private debt that's looking to finance shallow bay space. I think the secular tailwinds are there as it pertains to tenant demand, lack of new supply or availability of shallow bay space. So I would say it's a very liquid space right now.
Where do you think we are in the cycle as it relates to small bay?
Based on this room, there's a lot of people there. I think I'm more of a seller than I'm a buyer, but I want them to go pay ridiculous prices for it.
I think it's at early stages. We certainly saw a pop in rents post-COVID. That's cooled down, but it's gone from 180 miles an hour to 90 miles an hour. I mean, it's still well above the speed limit.
People buy on totally disconnected valuations because they think, oh my God, it's FOMO. I don't want to miss out. It's only going up and to the right. And, spoiler alert, it doesn't always go up. You got to buy stuff that has, lasting functionality. But for that stuff, I do think over time, asset values will increase because it's extraordinarily difficult to build it.
I would say probably the fifth inning, right? With the tail end of the, let's call it the ball game being when you start to get some of the core buyers into the market. That hasn't happened yet. I think you have a lot of value add capital that's chasing the space.
What signals are you looking at to gauge where we are in the cycle?
We look at rent growth, right? We look at occupancy. We look at, very simply, but beyond occupancy, demand for a product, right?
We keep track of what's going on in the marketplaces we're interested in. So we, on a day-to-day basis, we are aware of what's happening in our world.
What is it the institutions are looking for in this space right now?
We try to go where people don't necessarily see it as fitting their mold because that's where the value is. And so the institutions want masonry, they want tilt wall, they want a very specific unit size or base size, and then they don't want the things that are operationally intensive. And so we go where the sun don't shine.
So I think they're looking for good quality product. I think they're looking for aggregation. I think they're looking for portfolio product, which there's not a lot of it, right? Like you see these big portfolios that some of these guys are taking down. There's not a lot of 400,000 or 500,000 square foot business parks.
I think it's moving from that large single tenant distribution space into the small bay space. I mean, one, large bay is oversupplied, yields are low. It's just really tough to take through an investment committee. Now, if you have an investment committee that's a little bit courageous and you can get into a more management intensive asset class, you're going to get paid for it.
You need to simplify the management of small bay so you can allow those core funds and the institutions to come in. And it's getting there. Blackstone bought PS Business Parks, right? I mean, they usually start the trend. They don't finish the trend.
Right.
So, I mean, should see it. Everyone should see it as a great data point.
How constrained is new supply?
It's pretty constrained. The land almost always trades to someone who's going to develop. They want to develop condos. They want to develop apartments, something that is higher economic utility. So it's tough to find it. And by the way, people in towns don't want industrial. They don't understand that it's clean and this is clean. It's nice. It's sexy.
If you're an owner, it's wonderfully constrained. It's difficult to build. We're looking at something that we have tied up, getting ready to sign a PSA. And we did a replacement cost analysis. And if you want to run that through a return on cost based on your basis to get to that, our rents in our market lease assumptions are probably 60% of what the rent would be to replace it.
I think it's a landlord's market, right? People aren't building shallow bay or small bay product, right? It's expensive. Most of the oversupply has been in the big box space. So I still think, if you need a box that's, call it 2,500 to 10,000 square feet, I think you're kind of a price taker at this point.
Best thing about this product type is it's infill locations, it's low coverage, it costs a fortune to build, all the bathrooms, windows, entries, storefronts, all those things, right? It costs a lot. And so I don't think it's here to stay. I think for every building that's actually built in the small bay space, you're going to see another one get torn down.
How accessible is debt financing? How eager is the equity?
A lot of investor interest in the last few years wasn't in small bay. Raising equity in general in the last few years, and we have a good machine, but it's gotten more difficult.
We've never had an issue getting debt. We've always had multiple quotes on everything we do. A lot of it has to do with our reputation, our history, my partner's history. Equity changed in the last 3 to 5 years, right? It just did. So, I mean, we talked to some of the biggest names of private equity, some of the biggest names of institutions. A lot of them, like, if you were here 2 years ago, you would have had a platform turn sheet, unlimited money.
Of all the product types we're in, it's been the easiest.
What makes small bay more resilient than other industrial classes out there?
This is the heart of America. This is the 47% of America that works for small business, and this is their last line of defense. You want to talk about mission critical? They don't put food on the table for their family if they don't have a business to run.
You always get the downsized guy. It's really easy. Where do they go if they downsize from small bay? They go to their freaking garage, right? Like, there's not many stops left after us.
What do you think is the most misunderstood aspect about small bay?
Oh, I mean, no one knows what it is. My real definition, under 2,500 square feet, I consider true small bay. Once you get above that, you start to get into, like, you know, BKM had a different side, like, you know, 10,000 to 20,000 is mid bay. You do see development in that. You see things like that. So it's all who you talk to.
There's rhetoric around it's difficult to operate, maybe for people that are used to operating in office buildings, but for multifamily, this is like a cakewalk.
Where do you see the most opportunities in the space right now?
We're in all the Western markets, and then we're moving throughout the Southeast. Seeing a huge growth in demand in the Southeast. I love Dallas. I love Houston. We just took a big position in Orlando. We're getting into Atlanta right now.
We try to be agnostic. I mean, we're not going to go into tertiary markets, but just Emerald Creek as a firm, we've been around for 18 years now. We've done close to $3.5 billion of volume across 38 states. So we will go into different markets.
If we're sitting here a year from now, what do you think is going to be the biggest surprise for everyone about this sector?
I don't want to wish it into existence, but I actually think cap rates are probably going to start to compress on it. You know, it's interesting. People that are on the West Coast and these other, like, super dense, you know, California, whatever, they're all seeing these crazy low cap rates. Like you heard Brett Turner, right? You know, 5.5, 5.75. We would never underwrite lower than a 7. I actually think for those guys, they probably see a little bit of cap rate expansion. So I think they're right. And I think for these other markets that are high growth, that people are still buying at 7 is the market cap rate. I think you see
Some
those
compression.
those come down, and I think they coalesce somewhere.
That there's no surprise. It's just greater acceptance and greater probability that things are okay.